to talk about how the 2007 housing market debacle is showing some similarities and how those similarities are playing out today. Now, I came across this article talking, how does the title go? It goes, How Housing Market is Mirroring 2007 according to the new report. Now, in this article, it is pretty interesting to think about some of the things that they are talking about when it comes to how much housing is sold as far as the new construction market as opposed to the existing housing market, like, existing homes out there. Now, what this article has to say goes something like this. Today's housing market is mirroring what happened in 2007, according to a new report released today. Now, in this report, they go on to say the National Association of Realtors found that the share of new homes purchased in 2024 increased slightly to 15%, but existing home purchases declined to 85%. That reflects the same housing market that existed in 2007, when new home purchases also made up roughly 15% of the market share and existing homes were 85%. So what they are trying to say is that when the new home constructed market is like the prevalent one, it is showing similarities to what was taking place in 2007. But what happened in 2007, I think, is far different comparatively to what is occurring today. Because I left another link down in the description there for you. And in that second link, it is to the Federal Reserve chart on new privately owned housing units started. Now, this is very different from what was taking place back in 2007. So although we have like a similarity in the sense that newly constructed homes and the amount of those newly constructed homes within the market is similar to 2007, what was going on in 2007 is far different from what is occurring today. Now, in January of 2006, right, just before the 2007 housing market debacle, there was, I think it was January, it was January of 2006, the newly home starts, hold on, the newly privately owned housing unit started, there we go, was at a record high. Like the last time we had seen as many new starts as we did in January 2006, you would have to take that all the way back to the 70s before you would see as many newly constructed homes started as we did in January of 2006. Now, if you think about it, January of 2006 had the largest number of newly started constructed homes. It takes 6 months to a year to build a home. Some people might be able to do it quicker, but generally speaking, it's going to take somewhere around 6 months to a year. So all of a sudden in 2007, we had what was the largest amount of newly started homes, then moving into completions during 2007. So it would make a lot of sense that the homes that were selling during 2007 were going to be newly constructed homes, considering how many starts had taken place just earlier than that. See, let me show you the chart. This is really low tech. I'm sorry, guys, but let me show you right there. This is the chart, right? Oops, get the reflection out of the way. Right here, where my finger is, right there, that's 2006, right? You would have to go all the way back to the 70s to find a time in which that we had as many newly constructed homes started. So you think about that for just a minute. It's not reflecting the same market as 2007. We've had, you think about it, like right here, we are coming off of, let me shorten up the chart here. Let me take it to a 5-year chart. Oops. Actually, a 10-year chart would probably do better. Screw back. Okay. Right here, right after the 2008, 2007 recession, that is one of the lowest starts in history for homes, right? If you go back and you look at this chart on a max scale, that is by far the lowest. In May of 2009, there was less starts taking place then than in any time in history. Right? Since then, we have not risen in starts to exceed what would be average, right? So you think about it, we're like right here, right now with starts. Look at throughout history, right? Throughout history. See how the starts right now are not really that prevalent within the market? So new starts that are taking place now are not even remotely close to what was taking place back in 2006 leading into 2007. This isn't even the same market. Okay? And now what I find interesting about it is that when you go back and you read that article, it talks nothing of that. It brings up nothing talking about how it was that in 2006 there was so much homes under new homes under construction that led into the fact that there was going to be a huge amount of inventory of newly constructed homes that would be for sale. So again, this is not the reflection. Right? It says here, it goes on to quote, before anyone raises red flags on the numbers being similar to 2007, it's important to note the process of getting a mortgage for a home, be it a new build or existing property, is far more comprehensive than prior to the Great Recession. Right? It talks about the mortgage applications, talking about the ability to get the mortgage, but talks nothing of that new construction market. Even though it says, hey, before you get all the red flags, before you get all concerned about it, they tell you that it has to do with mortgages. It doesn't have anything to do with the starts, right? It's not so much this time around about the housing market experiencing the same financial conditions as prior to the last housing market crash, but rather a mixture of high interest rates and higher prices. I'm sorry, you don't think it's a lack of newly constructed homes? I mean, just my opinion, I mean, here we have new constructed homes sitting very close to what would have been average or less than average over the history of time. And yet you don't want to bring that up as one of the reasons why. I mean, yeah, I know it's all about the interest rates, right? All right, goes on to say here, quoting, the small but noticeable uptick in new build purchases is more than likely the result of builders offering more aggressive incentives than other properties. So we got close. I mean, we're talking about the builders and the incentivizing coming from the builders, but it doesn't talk anything about how 2007 had an historical record amount of newly started homes. Right? Goes on to say here with the quotes. With traditional home sellers still wanting to keep their historically low interest rates, the available inventory has still remained low, propping up valuations. Now, I can agree somewhat with this, in that the idea that people in their existing homes don't want to sell, right? They want to hold on to those low interest rates that they were able to acquire, during the pandemic or right before the pandemic, leading into the elevated interest rates that we are experiencing today. Wanting to keep those interest rates, keep those low rates, would then mean that you're probably not going to put your existing home out there for sale. So if that existing home doesn't go out there for sale, then yeah, that would make a lot more sense on why it is that the new builds would then be more prevalent within the market. Right? So yes, I can agree with that part of things. Right? Some buyers have seen that the new home builds have been an attractive offering due to all the promotions that builders have put in place. This should be one of the reasons for an increase in new home sales and a decrease in the existing inventory sales. And like I said, I can agree with that. This last quote goes like this. The current housing market continues to be generally unhealthy due to still limited available inventory in many major markets across the nation. This props up the higher valuation and reduces affordability for the first-time home buyers. Less demand and or more home inventory availability will be the only things that reduces or slows increasing property values as interest rates have stabilized in recent weeks. And I somewhat agree with that. It's going to take more inventory. And how do you bring more inventory to the market when you have a huge gap in production that has taken place? It means you have to have an overbuild to make up for the fact that you have had an underbuild. I mean, just look at that chart that I leave down in there for new home starts. I mean, we have dropped from the peak of home starts in the recent years. What was it? In April of 2022, we are now falling back down to where we were, say, in August of 2019. Right? So we're here Again, this chart, let me take it back to a 5-year chart. Here we go. So you can see there is no dramatic increase in the new home starts. It's basically staying stagnant, going flat across the screen there. Yes, during the pandemic, there was more. During the recession, the COVID-induced recession, there was a huge drop, but we are not increasing. We are not dramatically increasing the amount of new starts. That's what it would take to raise the inventory of homes out there in order to reduce the prices. It's all about supply and demand. And if you have a very limited amount of supply, then the demand is going to be very prevalent within the economy. With the promise of, or the promising idea, I shouldn't say with the promise of, with the promising idea of lower rates coming to not only the financial markets, but the mortgages, the general economy, the economy in general, you're going to find that the market is going to start participating within the housing market again in a profound way if they believe that the interest rates are going to be dropping and dropping significantly. Again, none of this brings the supply-demand balance back together again. In my opinion, what it's going to take is a massive amount of new build. It's going to take a massive amounts of new build. People say, now maybe if it was like all these people out there, the rich elite or whatever, that start giving up their 2 homes, 3 homes, 4 homes that they own and bring it down to just 1 home. Yeah, okay, that's a great idea, but that's not going to happen. Right? That's not going to be the idea that actually comes to the housing market. That's going to be one that's probably going to be more prevalent going into the future. As you can see, the separation between the rich and the poor takes place between property owners and capitalists. And if you're a property owner or a capitalist, you're most likely going to be in a position in which that then separates you from everybody else. Everybody else is trying to figure out how it is that they earn enough money to go out there and buy one of these houses that are all getting purchased up by the rich elite. It's not going to be easy. What's going to end up happening is the investment going into the housing market is going to be the one that's coming from either the people or it comes from the investors. And the people themselves going out there to try and build a home, like buy property, get the permits, hire the contractors, get the supplies, and construct that home yourself is not going to be something that is very prevalent within this market. Like, I cannot see the average person doing that. Now, the average person is hoping that there is going to be a market condition in which that they would be able to participate in. But when you think about what it is that's happening within this market and how much building would have to take place in order to make up for the fact that we have had a huge gap in production over the last few years, it's probably not going to take place. Like, I mean, even if it was, if you had a ramp up of massive building happening, what I know about the lumber industry is that there's not enough supply of lumber out there to fulfill a massive build to take place. In fact, the capacity of the mills themselves, considering the amount of curtailments and shutdowns that have happened over the last few years, wouldn't even give them the ability to do it, to provide enough lumber and material to fulfill a significant demand. We have not been in that market condition. If we were in the same condition as we were back in 2006, where you had massive amounts of home starts and people looking to build all over the place, and the people who are supplying that lumber were feeling it, yeah, man, there's going to be a huge demand coming to the future, they would be participating in trying to supply the future with that. But if they do not have that taking place and they feel that the demand is going to be low, then they are going to pull back on their production. And this is exactly what we are seeing today. All right. I'm going to give it like another 10 minutes, guys. Is there any questions or comments that we have here? We got Buck52. That was a campaign promise. Don't count on it. Talking about Jeff Brewer saying that. Let's go up. Buck50 says, everyone look under your chair. Everyone gets a house. All right. The banks are giving out high-risk loans just like 2007. Foreclosures and bankruptcies will flood the market and raise the inventory. I don't believe that, Buffett line. I don't believe that they are giving out a bunch of high-risk loans. You know, I mean, I personally in the last, 3 years ago, had to go get a mortgage for my house, and it was difficult. Like, it wasn't something that they just handed to me. They demanded extra payment, all kinds of documentation. They were not just willing to just give me a house. Now, in 2007, I did buy a house, and that was super easy. I hardly even had to prove who I was or anything I was doing. In fact, I switched jobs right in the middle of trying to acquire a mortgage. The mortgage lender was freaking out about it, and I'm like, hey, what do you do, man? I'm working construction. Go figure it out. No problem, man. Got the loan anyway, right? In 2007, they were handing out loans to anybody. Like, you just had to have a beating heart. Barely even that. In fact, I think some people didn't even have a beating heart and were able to acquire loans, fraudulently, but it was happening. That sort of situation isn't taking place. Now, I'm not saying that some of the people who are acquiring mortgages might not be in a compromised position themselves, like if they lose their job, not being able to make the mortgage payment. And I'm not saying that's not going to happen. Like, that very well could be the case. In fact, that would be the case that would need to take place in order for there to be a significant rise in foreclosures and, sale of homes through distress or something of that nature. It would take a significant rise in unemployment, and then for those unemployed people to then stop making their payments, and then those stopped payments then leading into a bankruptcy or foreclosure or something of that nature where they go to repossess the house. How long does that take? Like, from the time that you stop making your payments till the time that you're actually foreclosed on. Now, in the beginning, that could be very quickly, right? That could probably take place fairly in a short amount of time. But if you start adding a whole bunch of people to this pool of foreclosures, then it's going to start taking longer and longer to process through all those. How long does it take before those houses become an actual available home for sale or for people out there to take advantage of because it's in foreclosure? This is a longer time period than people, I think, are really registering. And then inside of that, what will the government do? Like, if this becomes significant, they're going to take action and like bail the people out, keep you in your home, keep the whole thing from falling apart. We don't know what actions they're going to take. And that if they're, depending on which administration that comes in, there will be action. What that looks like will be very different. And again, like, this is something that I think a lot of people should internalize, in the sense of, like, how would this play out? It's not the same as 2007. They had loans like ninja loans, and just people who were getting loans that were never going to ever pay them back. That's not the case today. They don't have like that predatory lending that was happening back in the day. Like, they don't have the predatory lending like back in the day. They don't have that today. Let's go check out this super chat real quick. Not your problem, $1.99. Game, guess how much it will drop in percentage? I look at the supply demand, right? Supply and demand. If you have a limited supply like we do right now, and you have an excessive amount of demand like we do right now, and you see those property values start to move up, or even if you just see that the property itself is limited, the rich will buy into that. That's what we're seeing happen right now. Think about how many cash sales are occurring within the mortgage market. A lot of people don't even realize that like 50% of homes right now are being sold with mortgages less than 5%. 5% mortgage rates. They don't realize that because of how much builder demand is now, or builders are moving into providing that demand. How am I saying this? To increase the demand of their sales, they are offering buy downs. Right? They have the ability to do that. This is our house. We will figure out how it is that we can get you into this. And if it takes buy downs to do it, then that's what's going to end up occurring. Right? And this is what we're starting to find happening within the building industry itself, is that the builders are figuring out how they can increase the demand. They're not waiting for the market conditions to get there. All right. I tend to think George Gammon is more right about the housing market going down. Well, I mean, a lot of people are of that opinion, right? I mean, a lot of people are. But what I know of Cantillon effect, when I look, here's a good example of it. If you have a limited of anything, right, that rich people want, then they'll get it. Right? And here's a good example of it right now. You can see this taking place within Russia, right? I was reading an article talking about the high-end vehicles that still find their way into Russia for the rich elitist. Like, if they have the money, they'll still get their car. Even though there's sanctions, there's blocks, there's all kinds of stuff, they got the money, right? They got the money and they will get their property. And so when we think about this, there is now rich elitist people who would typically want to buy a Lamborghini who are no longer available to buy a Lamborghini because they're in Russia and they got the sanctions and can't have it coming in. But yet, if you have enough money and you're willing to pay it, well, then you can get somebody else to buy that car and drive it into Russia for you and make it a legal transaction that is happening. You got to pay a bunch of middlemen in order to do it, but eventually you'll get your property. Now, some rich elites, they're not going to do it. It's too much for them. They got priced out. But the real rich elite, the elite, they still get theirs. And no matter what, that will be the case. If you limit the amount of properties that are available out there, if you have a demand that is exceeding that of what it is that is being supplied, you know that the people who can recognize that are going to try and take advantage of that. And this is what we are seeing today. All cash buyers are moving into the real estate market in a more profound way than they have in decades. I think it's more cash buyers now than there has been since like the 80s. Well, you think about that. Cash buyers can care less about where interest rates are. They can care less about the incentives. They can care less about all that stuff, and they're willing to pay at this price. All right? What does that say? To me, it's showing a sign of the separation between the rich and the poor. It's more of a Cantillon effect happening right now. And as people are hoping and wishing and dreaming that there's going to be a reversal to this, you can't reverse the Cantillon effect. It doesn't work like that, right? It's moving in a particular direction. And if new money comes in, the separation takes place. People are waiting for the separation to then become less, like less inequality coming to the United States or coming to the world. And I'm thinking, no, not until you have a complete financial crisis in which one that you don't come back from and the new system is born, right, which a lot of people say the BRICS nations is trying to develop. Until that actually happens, you're not going to see the inequality come less. It's only going to get worse. And a better way to see it, capitalist and property owners. Right? How many people are going to end up being renters for life? Most people. Most people are going to be renters for life. It's just the case. There was a time in which you could work down at the gas station. In the early 80s, you could have been a gas station attendant, bought a piece of property, got the permit, stick-built your own home with very little carpentry skills, right? I mean, you could, as long as you had some just rudimentary carpentry skills, knew how to operate a saw and pound a nail, you could frame a house together. It may not have been a spectacular home, but it would have been a home. And an individual who was of mind could do it. Today, it's not happening. Like, I know one guy who is piecing his house together. It's a big house, and it's taken him a very long time. He's the only person I know of who does that, right? Everybody else is going to be under the need of a builder of some sort. They're going to be dealing with permitting issues. They're going to be dealing with material problems. I mean, there is all kinds of stuff that happens today that the average person is just not going to be able to handle. Right? I mean, maybe if they're already in the game and kind of understood it some, then the average person might be able to do it, but that's not going to be the average person. Like, the average person doesn't know how to do all this stuff. Could they learn it? Absolutely. Is it impossible? No, it's not impossible, but it's not prevalent, and it's not going to be. All right, let's check it out. Here we got another super chat down here. Not your problem. What's your opinion on new build, bad quality? No, I guess that really depends on your builder. Really, it does. Like, I know builders, because I'm in an area of, like, it's becoming very affluent here in Astoria, right? Like, it's a very expensive area to be. And the homes here are more custom homes than they are, like, speculative homes. Like, we don't build track homes around here. Almost all the homes are for an individual. They're either built for like a customer who wants it a specific way, or the spec homes that are built are usually higher end homes. So now when I think about like crappy built homes, I think about the individual who is building that, not necessarily like generally speaking, but of a particular builder and their building style. If you go into some areas where they are just slamming homes together, they're building 1,500 homes, there's 5 different, house plans, and they're just knocking them out as fast as possible. In those conditions, I would be very concerned about the quality of the home. But if it's an individual contractor. This is his project. This is what he's working on. This is the home that he is building. He's not worried about building 1,500 of these things at once, but just building the one. I think you're going to have a lot more of a quality home built out of that, right? So I guess it depends on how they are built, right? Like, are they built for speculation, like they're planning on being sold, or is it being built for an individual person? You know, there's way different styles of building going on, and then the material going into it on top of it. You know, are they buying the cheapest stuff possible, or are they going out and buying quality? You know, are you sheathing with OSB, or are you sheeting with 5-ply CDX? There's, you know, these are two different components. You know, it's like not even the same thing. Are you putting in, like, you know, good high quality fiberglass doors, or are you putting in just a basic steel door that, you know, that is the cheapest one you could find? It's like, I haven't seen a foreclosure in our newspaper this whole year. Kind of strange. Yeah, I don't know. I mean, I would imagine at some point, if you start seeing unemployment rising significantly, then you're going to start seeing the foreclosures. The reason why you don't see foreclosures is because most people probably are not underwater, right? Unless you bought your house in the last 6, 7 months, 8 months, a year, or something like that, most likely you're probably not underwater on your house. So even if you couldn't make the payments, you just sell it, right? Just sell it. And, you know, even if you have to discount it, so long as you're not, you know, selling it for less than what you owe on it, then you can at least get out from underneath it. And I believe that's probably going to be within the market until we see a significant rise in unemployment, and then people not being able to make those payments, and then we start seeing the housing prices come down, and then they go underwater. But right now, if you're not underwater, there's no point in being no point in foreclosing. Just sell the sucker, you know. All right. UE, from the Angry Capitalist, do you consider the prevalence of government-backed low or no money down loans as a risk? Absolutely, I see it as a risk. Because anytime you ever offer up more of an incentive to the people who normally would not be able to acquire a loan, and you're like, here, I'm going to give you the ability to have a no down payment loan or lesser of a down payment or something of that nature, what you are doing is you are elevating demand. And if you have supply demand imbalances, then if you elevate demand, how does the supply become more affordable? You can't. All right, that's the major problem. In fact, we discussed this the other day in a live stream. That was in my other car, so I don't have the little sheet of paper that I was drawing it out to show you how that worked. But ultimately, if you have demand going into, or you have government moving power into the demand side, right? If you're elevating the demand, there is no way that the prices can come down. It's going to make it less affordable. The handful of people who first get access to that money, well, they get to take advantage of it, right? Just like any other new money that comes into the system, the people who have first access to it, they get to take advantage of it. But after that money starts moving in, then it doesn't provide any help anymore. And in fact, it makes the problem worse. As if you are not one of the people who then gets the subsidy, then you're left behind. In fact, it makes it even worse, because if you don't get the subsidy, now you have to come up with ever increasing amounts of more in order to compete with the people who do get the subsidy, right? So again, there's no way of fixing this without bringing new inventory, new home building construction, right? Whether it's a new home or massive amounts of apartment buildings, there's nothing that can be done to try and make it more affordable for the people out there without more inventory. That's it. This is straight up, that's it. And since we had a huge gap in production taking place over the last, basically since the great financial crisis, we have never ramped up the new construction to the level that we had experienced in history. We are very average or below average in new construction starts. And without that new construction starts, you're not going to have new inventory. Without the new inventory, you're going to have the supply-demand imbalances, and that will be prevalent going into the future. If that stays prevalent, then you are going to find that the rich elite property owners are going to continue to separate themselves from everybody else as they acquire the properties. Because they can, and they will, right? All right, what time is it? Alrighty, guys, I'm going to give it like one more minute here, and then I got to go back to work. Uneducated Economist, I can disagree. You could squash all the pricing index with zoning reform. Okay, crummy VCR, I agree to a certain extent. You could do that. Now, if if we made it easier through zoning to build homes. Let's say that we just made it easier. Boom. Now you got a bunch of people who are going to run out there and try and build homes because the zoning issue is no longer like the permitting, all that other stuff makes it so much easier. The amount of new home construction that it would take in order to increase the inventory would zap all the lumber market. It would zap it gone. In fact, any kind of increase right now, I think, is going to have a profound impact on the lumber prices. And now if you're sitting in that situation and the suppliers cannot meet the demand, then again, you are going to see lumber prices start to move up. And if it's an inelastic demand like we had experienced back in the grapevine or during the COVID recession, right, during the COVID problems, if you have inelastic demand, all of a sudden everybody's like, no, I want to build. The zoning laws are now, capable for me to get out there and start buying or building. Right? You start building, there's no lumber out there. Lumber prices go up 30, 40, 50% or even higher, hundreds percent, right? Because right now lumber futures are down quite a bit. They jump back up to 1,000, 1,500 per thousand again or something of that nature. And you're going to find that building a new home did not get any cheaper even though the zoning did. So right now we are sitting in a situation, I just don't see how there is any way that you are going to build homes cheaper. Like, this is your opportunity to build a cheap home. If you can take advantage of it today, then do it. But if you can't, you're going to miss out on the opportunity to build cheaper homes going into the future, especially if there's any kind of increase to build. If there's any, like if the government steps up and says, hey, we're going to try and get 2 million houses built, right? You're going to see the price of building a home go through the roof, and there's no way that it's going to bring the price of it down. Right? No way. So I just don't see it. I don't see any opportunity, even through zoning changes, that it's going to be able to provide an ability to bring in more inventory without there being a massive increase in price. Like, I just don't see it. Alrighty, guys, I gotta go. Thank you for hanging out. We got 341 of you watching with 75 likes. Go hit that like button. $3.98 in super chats because you guys are always so generous with those super chats and supporting the Uneducated Economist. You can also support the Uneducated Economist by going and buying the Cantillon essay. Cantillon essay is available through the Amazon affiliate link, but you do not have to buy this essay from the Amazon affiliate link. You can get it for free at the Mises Institute. So just Google Cantillon essay on economic theory. It should pop it up right away, so you can go get that free PDF from the Mises Institute. But you will be supporting the Uneducated Economist by buying it off of the Amazon affiliate link. But if you don't want to buy the essay, go buy whatever you want. Just click on that affiliate link first. By clicking on that affiliate link and then putting whatever you want into the Amazon cart, I will get a little bit of commission off that, so long as you make the purchase within 30 days. And then you can also support the Uneducated Economist by joining the channel. $1 a month, you'll have access to member-only videos. We try to put out a member-only video at least once a week, covering the speeches coming from the Federal Reserve, talking about the monetary policy. There's plenty of member-only videos in the that we have done here that you can go back and watch and learn up on how the monetary policy is really operating, not that through the view of the mainstream media or a lot of these misguided economists out there, but describing the monetary policy for what it really is and how it is that the Federal Reserve has been doing this strategy for well over 20 years now plus, because it's going on for a very long time. But again, you can only access those through the membership only portion of the channel here. But again, it's only $1 a month. So really you're supporting the Uneducated Economist for $12 a year, $120 a decade for some of the best information that you're going to find out there from a working class point of view to really describe what it is that's taking place out here. So thank you everybody for being here. Thank you for hitting that like button. 300 people still watching. You guys are awesome. Uneducated Economist, you let me know.